Greetings, investors. Today, we're going to go over our 10 rules for investing in the stock market. Number 1. Always do your financial research. There are many people that buy stocks based on the companies that they like. For example, some people may buy Nike stock because they like Nike shoes. This is not at all what you should do. Do not buy a stock just because you like the company. Buy it after doing heavy financial research. Number 2. Do not buy a stock just because the majority of people are buying a stock. This relates closely with rule number 1. Just because billionaire investors and many others are investing in a certain stock, it doesn't mean that you should too. You must always do financial research before buying a stock. Number 3. Understand what the company does. You shouldn't just take a look at the top 100 stocks and select random stocks and buy them. You have to understand what each individual company does and why are they so special and what would cause their share price to increase in the future. Number 4. Keep a diverse portfolio of stocks. Make sure that all of your stocks are not from one specific sector. You should have stocks from a variety of different industries. You can have some from the technology, some from retail, and some from consumer goods. It is important to have a diverse portfolio to prevent your portfolio from going belly up. For example, if all of your stocks are from the oil industry and the oil industry goes down, then your whole portfolio will be negative. You'll be losing a lot of money. Number 5. Look at past trends in order to predict the future of a stock. For example, if we were analyzing Apple stock, we could look at how the stock price was impacted when the iPhone 4 or iPhone 5 came out, and then based on that information, we can predict how the stock price will be impacted when the next iPhone comes out. Number 6. Be aware of a company's position within its sector. So, for example, if we were analyzing Home Depot, we know that Home Depot is a major competitor within its industry. Knowing a company's position is key when researching stocks. Number 7. Do not believe that just because the stock price is low, it is a good buy. Just because a stock price is low, it doesn't mean that it is a good buy. You should research why the stock is low and why does it have the potential to increase in value. Number 8. Do not invest all of your money in one stock. So, if you put $5,000 into your stock brokerage account, do not invest all $5,000 in buying many shares of one stock. Because if the stock does very poorly, you will lose a lot of money and it will be very difficult to recoup the amount of money that you lost. Number 9. Do not buy all the stocks at once. What you should do is invest from time to time. For example, if you think Apple stock is a good buy, then it is better to buy 100 shares first and then after a week or two, based on how the stock and the company is doing, buy more shares instead of just buying X amount of shares all at the beginning. Number 10. Be patient with the market. Stocks go up and they go down. It is important that you do not stress if a stock doesn't go right up after you buy it. You have to be patient with the market and make the right investment decisions. So, these are our tips and rules for investing in the stock market. If you guys have any tips or comments, please feel free to share with them today.